Hey guys, hope you're all doing well. Welcome back to my channel. So a question that I get all the time is, hey Dini, how exactly do you trade? How do you go about trading? What are your rules? What do you look for? So in today's video, I'll be showing you 100% of the methods that I use, the way I go about trading, and what I look for. So this is the video you've all been waiting for. I'm not charging you anything for this video, so don't skip anything. So yeah, before we start this video, I need you all to know that I'm giving away free access to my paid course. All you have to do is sign up and make a free account with bit.com. Bit.com is the sponsor of this video. If you don't know bit.com is a crypto exchange platform. They offer good security, 50x leverage, and the platform is just beautiful. So yeah, you get to access my paid course. You get to learn exactly how to trade from A to Z. All you have to do is make a free bit.com account. It literally takes 2 minutes, and once you do that, send me an email or a DM or a Telegram message. All the details will be in the description below. Make sure you use the link in the description below, so that way you get the right details. So yeah, without any further ado, let's get this video started. The game plan. There are 3 important things to work on to have a good trading career. Number 1, risk management. Number 2, strategy. Number 3, mindset. Risk management. Your risk management plan should be as follows. Number 1, risk 1 to 2% per trade. Don't go above that. No matter how good of a trade setup you have or how much you think it's going to work out, do not risk more than 1 to 2%. Trust me, it's not worth the headache. Number 2, don't trade before or during high impact news events. So if there's NFP coming, non-farm payroll, which happens on the first Friday of every new month, then just don't trade during or before it. Just either don't trade on that Friday, or just understand not to trade before or during. Okay, so wait for it to pass, or maybe don't trade the whole day. Number 3, use a minimum risk reward ratio of 1:1. If you're looking to make 100 pips, you should risk 100 pips. Never risk 150 pips to make 100 pips, right? So make sure your risk reward ratio is 1:1. If it's 100 pips, you're risking 100 pips. So that means if you're looking to make $10, you're risking $10. Strategy. If you're using the 20% strategy, here is your short checklist. Number 1, use the 1 minute time frame to spot setups. Make sure you understand that. Number 2, find the large candlestick and make sure it's a minimum of 5 pips. So it can't be 4.9, right? Make sure it's 5.0 or more. Number 3, make sure the second candle opens above or below the large candlestick. So make sure you understand that. Zoom into the charts if you have to double check. And if you think, it's touching it or you have doubt, stay out. Number 4, make sure the second candlestick is smaller than the large candlestick. Number 5, plot your 20% take profit zone. Plot your where you will be taking profit, where you will exit the trade. Number 6, make sure the minimum profit target per trade is 100 pips. Number 7, make sure the RSI is overbought or oversold. So 70 or above, that means overbought. 30 or below, that means oversold. Number 8, make sure to not use TradingView and use MetaTrader 4. TradingView on the 1 minute time frame, it shows you different candlestick sizes. So yeah, I recommend using a low spread broker on MT4. So don't use TradingView yet. Number 9, be patient when finding setups. Sometimes, the 20% strategy might not give you a setup for 3 days in a row. That just means you need to have patience. Mindset. Mindset is key, so be sure to follow these important rules. Number 1, if in doubt, stay out of the trade. If you think something's wrong with the setup or you're not too sure, stay out. Watch and see what happens. Most of the time when you stay out, you'll thank yourself for staying out. It's not worth risking a trade, for the sake of, FOMO, fear of missing out, right? You don't want to have FOMO, fear of missing out. Stay out if you have doubt. Number 2, if you lose a trade, you need to give yourself a small break, whether it's an hour or the whole day, right? If you lose a trade, the best thing to do is to not take a trade, because usually when you lose and you take a trade right after, that second trade you've taken is going to be a losing trade. So give yourself a break, go out for fresh air, go do something else. The market is not going to, end, right? So yeah, just understand the market is not going to end. There's going to be more trades that you can take. So don't worry about missing out. Number 3, understand trading is not a job. Most people come into trading and expect to get paid every week consistently, like a salary, right? But no, trading is not a job. It's a business. It's an investment business where you put your money and your money will go up and down. It will fluctuate, right? There's no guarantee there's no salary. You improve your skill, you invest your money in, what you think will grow in value, and that's it. That's what you can control. You don't control the end result, so don't expect to have a paycheck. Number 4, control your greed. If you made 100 pips, stay out, come back the next day. Don't look to make 200, 300, 400. Greed is a killer, I promise you. I remember back then, when I didn't have a strategy and I was gambling, I would win, I would have a big win. Then I would risk that entire win and my entire account just to win more, right? Greed is bad. I'm telling you, it's not worth having greed. It's going to destroy you, and you're either going to quit trading or you're going to continue losing money. Number 5, don't have hope in a trade. You want to have strategy and no hope. Hope just means you've risked so much and you're not acting on your strategy, right? When someone has hope in a trade, they are risking more than they can afford to lose, and they aren't using a strategy, right? They're not using a strategy. So don't have hope, have a system. Number 6, don't let a winning trade get to you, right? Like I said with number 4, when you have a winning trade, don't think yourself as, a big shot, right? Someone that wins all the time. No, you gotta humble yourself. You gotta understand, hey, I'm in the winning phase, right? There's losing phases and there's winning phases, and you can't let it get to your head. Number 7, have patience when waiting for a setup. Like I said before, sometimes setups won't form on a Monday or a Tuesday or a Wednesday, but it can form on a Friday, right? So you have to have patience. If you don't have patience, it will make you do the wrong things. It will make you not follow your strategy. It will make you become greedy, right? So patience is very important. The game plan. Now that you know the rules to the strategy and also how to break the charts down, you should do a few things. Number 1, trade on a demo account for 1 to 2 months. Yes, I suggest you trade on a demo account for 1 to 2 months to test the strategy and to get used to managing trades. There shouldn't be any rush to trade on a live account with a strategy you have never traded with. So don't worry, there will always be trades that you can take and you won't miss out on anything. The aim is to understand how the strategy works and to be able to make consistent profits. So yeah, open a demo account with a low spread broker and just, spend time taking trades with a strategy 1 to 2 months, right? Once you get used to it and you're consistent, then you can open a live account. Number 2, practice trading using Soft4FX. Use the Soft4FX backtesting software, which allows you to go back in time and place trades. Take 100 trades and trade like it's a live account. Gather stats and get the hang of trading with the strategy. Trading on the demo account is more than enough, but if you want some more training, then you can use this software. So number 3, go time. When you feel like you're ready to trade on a live account, then be sure to open a low spread broker, preferably IC Markets. Now, I'm going to figure out exactly which brokers you can use, so definitely message me, but personally I use IC Markets. Also, be sure to not use TradingView, as the candlesticks shown on the 1 minute time frame are usually different compared to MetaTrader 4. And I've realized this, the candlestick sizes are so different compared to, when I use IC Markets MT4, right? So yeah, make sure to avoid TradingView for now. And yeah, just to summarize the 20% strategy, and just to make it really simple for you to understand, it's basically like this. You find the large candlestick, right? Then make sure it's 5 pips. Then you look at the second candlestick and make sure it's below the large candlestick, this one here, right? Make sure it's right below and not touching the first large candlestick. Then in this case, we are expecting price to go down, okay? And price does go down. Now, you set your take profit line where you will exit the trade. So roughly in this example, it would be here. So that would be where you would close the trade. And then you make sure price gives you a minimum of 100 pips of profit. So let's say price goes down and now you have a 100 pip entry, then that's good. So next, you make sure the RSI rule is being followed. So we have 70 here and we have 30. So let's say price goes up and down, and in this case we want price to go below 30. So yeah, we have a 100 pip minimum entry, which is good, a large candlestick, which is good, second candlestick below, which is good, RSI rule below 30, that's good. So now you can enter this trade. As long as this trade gives you a minimum of 100 pips, then it's a valid trade, right? You made sure the large candlestick is there, you follow the second candlestick rule, you waited for price to go down 100 pips minimum. Now, it doesn't mean you have to enter after 100 pips, because sometimes, price could be going down so hard that you don't feel like entering the trade. So maybe you'll enter at 150 or 170, but this is just an example. If you feel like price is slowing down when it's on your entry, then yes, you can go for that trade, right? So now you have a valid trade, you can go for the trade. Another way of entering is, let's say you find your large candlestick and then price goes down, and let's say your minimum 100 pip entry is there. You can enter and target the 20%, correct? But what you can do is you can go on the 1 hour time frame, the 4 hour time frame, or the daily time frame, and then you can see if there's a support level or a resistance level you can use. In this example, we are buying, so we are looking for a support level we can use to increase the probability of having a winning trade. So let's say this is the 1 minute time frame and you have your 100 pip entry. You can go on the 4 hour and maybe there's a support level just below, maybe 50 pips below, right? So you would now have a 150 pip trade, right? Instead of a 100 pip trade, right? And you will have an increased probability of a winning trade, okay? So this is if the large candlestick is bearish, which means if it's bearish, we're expecting price to go down and then we're buying. Let me show you what it looks like on a bullish candlestick. So it's the same thing. Bullish candlestick, second candlestick above, then we wait for price to go up. When our minimum 100 pip entry rule has been met, then we set our take profit line, or you can set that before. You can set the take profit line whenever you wish. As long as you spot the large candlestick, you can set your take profit line. Now we look at the RSI. So let's say price going sideways and then breaks above, right? So the RSI is good, it's above 70, okay? So yes, we have a valid entry. We have minimum 100 pips to gain. The large candlestick is minimum of 5 pips. Second candlestick is above, right? This is what we're looking for. If this is a bullish candlestick, we're waiting for price to go up. Because why? We are selling, right? If the candlestick, the large candlestick is bullish, then we are expecting to sell and target the top side, near the top side of the candlestick. If you're buying, then your take profit will be near the bottom side of the large candlestick. If you're selling, the take profit line would be near the top side of the large candlestick. And just like before, you need to look at the 1 hour, 4 hour or daily time frame to see maybe if there's a better entry. Maybe if you wait and you look at the 4 hour resistance level, in this case you might get a 150 pip trade instead of a 100 pip trade, and this would give you an increased probability of having a winning trade. And yeah, last but not least, make sure to apply all the rules. So don't forget the strategy rules and all the mindset rules and all of that. Make sure you understand all of it, and then you'll be ready to go and ready to place real trades. So I hope you guys enjoyed this video. I hope you learned a lot. Make sure to smash the like button, and if you're not subscribed, subscribe right now, and I'll see you on my next video.